at the fixed income market. Now that's what we're going to be taking a look at, and I'm going to be speaking with Bankole Odusanya on the issue. Well, Bankole, thank you so much for joining us. The yields at the fixed income market continues to, trend north as we have seen, reduced inflows from foreign portfolio investment. Can you talk us through this?
Yeah, thank you very much. Basically, what we've been experiencing, aside FDI inflows reducing, we're seeing that yields are climbing up because generally appetites in the market favor yields higher than the level which they were. We saw yields at 10.9 as at the beginning, mid-March, and right now we're talking of 12% at the auctions. And the incessant almost, that's issuance of security to curb liquidity, done by CBN has also not helped a great deal. So basically, those who had positions at 10 levels and 11 would be at a loss now if they've not sold out. So basically, we're seeing a lot of sell down to take profit or minimize your loss and basically take newer positions. Because yesterday we saw stop rates at 12 and 12.25 for September maturities that were issued. That's for the T-bills. On bonds too, we're seeing increase in yields. Basically, profit takers are active there too. FDI inflows have generally reduced. This is also having an impact on the FX market, which we'll touch on later. But in the securities market, basically, you'd rather sell now, take some profit or minimize your loss, and then take new positions. So it's just basic arbitrage, reverse kind of arbitrage right now.
All right then. Now the forex market had been bearish for the naira as oil majors slowed down on sales. Now what else is causing this bearish trend?
Okay, I'll just run you down what has happened in the last 2 weeks, which now looks like a cycle. The oil sector, the oil companies sold some huge amounts 2 weeks ago, namely NNPC and Shell. Shell was undisclosed. And we had some other companies sell some small amounts to take profits of the higher than 158 levels that we saw. This helped to reduce to strengthen Naira a bit. We saw Naira get back last week to 157 levels. In fact, on Friday, it closed at 157.70. And then on Monday, what we saw was that when CBN issued 300 million at the WDAS, which was done twice in the week, some investors or buyers came to buy at the secondary market because of the low rate we had achieved because of the oil sales I just described. What this has done is that it has weakened the Naira further at the interbank. So it looks like a cycle. Next week, oil companies will come take advantage of this fantastic rate to sell and get more proceeds. And then the CBN would intervene. So basically, we're seeing 158 as a more stable level for the Naira now. Whenever it gets to 157, it seems like the new low. Investors are struggling to buy at 157 at the interbank, basically.
All right, now,
that's what's going on currently.
All right, now, but do you think the foreign investors will continue to consider yields on Nigerian bonds, attractive, considering the fact that they've dropped significantly since last year?
Yes, the yields are attractive. They are still inquiring, even though we're not seeing them come in to buy like they bought towards the end of last year, especially between August and the last quarter, when there were announcements that Nigerian bonds will be quoted at international platforms. That news has since waned, and it's not really affecting the markets much. What we're seeing now is that there was a lot of activity at the American stock markets also. We saw a bullish market, and so we saw a slowdown of people coming into the riskier market in Africa, basically. We've seen that some people would rather take profit or are reasoning on how sustainable the rise of that American stock market would actually be. The sustainability is also a concern. So we're not seeing them sell down and leave and not come at all. We're seeing them inquire and check. You don't want to get in at 12 and then by next month we're at 13. Because by March, beginning of March, we had securities auctions at 10.5, 10.9. We've seen securities move to 11. In fact, like I said earlier, we've seen yields stop at 12 and 12.25. So, and then the government also sold some special locally here at 12.75. It seems that 13% is very attainable. So why not hold on a bit, play on the short-term markets, and then getting at 13. As at the beginning of the year in January, market started at 13, and we saw a pull down of yield to 10%. So 13 is a fantastic level. 12 itself is not a bad one. So we expect that investors will definitely come back. What we're seeing is just profit taking for now, and just watching what will happen. Okay,
now do you anticipate, further decline in yields given the positive outlook, for inflation?
Yes, inflation actually, if we were to look at inflation, you expect yields to continue to drag down. But the way it works is that the CBN is trying to keep inflation where it is to ensure that it's a single digit, even though they have said it will range between 9 and 11. So what they have continued to do at the CBN is to continue to mop up liquidity. And what this causes on the other end, on the flip side of the card, is that there will be illiquidity. And when there's illiquidity, you need to sell some of your securities to meet obligations. That in itself pushes yield back. So if we look at that cycle, then you'll favor stability rather than a drag down in yields. So for us to see a drag down in yields, we have to see a major influx from FDIs. We need to see major demand from them, and this can be channeled into almost securities. They have to go into primary securities because there's a restriction.
All right, there was